Nothing is certain but death and taxes. Hatred of taxes for Americans dates back to its colonial past when Great Britain used to tax every consumer good. After independence from the British and their taxes, the Americans were made to pay taxes to the American government. Mr. Smart presents you a brief history of the evolution of taxes in the USA. In 1862, the American government introduced a progressive federal income tax to meet the Civil War expenses. Later in 1872, this tax was abolished. In 1894, the federal income tax resurfaced only to be declared unconstitutional by the Supreme Court the very next year. The most important step in the U.S. tax history is the passage of the 16th Amendment. It was in the year 1913 that Congress introduced this amendment, which reads, "The Congress shall have power to lay and collect taxes on incomes from whatever source derived, without apportionment among the several states and without regard to any census or enumeration." Later in 1943, Congress passed the Current Tax Payment Act, which obligated every employer to deduct federal income tax from the salary of an employee and pay it directly to the tax authorities. Afterwards, in 1953, the former Federal Bureau of Internal Revenue is renamed the Internal Revenue Service. This tax regime is based on Robin Hood folklore, to get from the rich and pay to the poor. As you have seen, initially there were no taxes in England and America. People only paid taxes if there was a war. England levied a regular income tax in 1874, while the United States levied it in 1913 with the adoption of the 16th Amendment. Governments popularized the taxation with the notion that only the rich would pay the taxes while the poor and middle class will be the beneficiary. That is exactly the Robin Hood tax system. The appetite of governments increased exponentially with time, so they taxed the poor and the middle class as well. These were the very people who voted for the tax regime. Consequently, the ultimate beneficiaries of this tax system were the government functionaries and the rich. Government officials received salaries and pensions from the tax money, while the corporations of the rich received heavy money from the government contracts. Income tax is levied in all countries around the globe except a few oil-rich countries. These countries include the Kingdom of Saudi Arabia, Qatar, United Arab Emirates, Oman, and Bahrain. Dear viewers, do you think that the current tax regime in your country is just and well-balanced? Or do you think that your country's tax regime favors the rich? What changes would you suggest in the tax regime of your country? Your fellow viewers and Mr. Smart would love to hear from you in the comments section. Thanks for watching, guys. If you've enjoyed this video, hit the like button below. Don't hesitate if you have any question about personal finance. Moreover, let us know of which personal finance book you want reviewed next. Mr. Smart would love your questions and suggestions. Subscribe to your very own YouTube channel, Mr. Smart, and hit the bell button for notifications. It's totally free. Dear viewers, this animated review series is not a substitute of the original book Rich Dad, Poor Dad, which Robert Kiyosaki has written like a story based on his own life. This book is the best-selling personal finance book of all times, with around 30 million copies sold in more than 100 countries. This book is translated in more than 50 languages. This book is a must-read for aspiring entrepreneurs who are currently entrapped in the rat race of get up, go to a job, and pay bills. Mr. Smart highly recommends you to thoroughly read this book. British philosopher and statesman Francis Bacon once said, "Some books should be tasted, some devoured, but only a few should be chewed and digested thoroughly." Rich Dad, Poor Dad is one such phenomenal book which should be chewed and digested. You can find the link in the description for the audio version as well as the hard copy of this book.